Hi, it's Joe Mazumdar of Exploration Insights. I'm at the January 2026 edition of the Metals Investment Forum, and with me right now is the CFO, Nikolakakis of Arizona Sonora Copper. Nick, Happy New Year.
Happy New Year to you too, and thanks for having me, Joe.
So, Arizona Sonora is a company we've held for a while in the portfolio of Exploration Insights, and the rationale was it was copper, it was cathode, it was in a great jurisdiction in Arizona, and it was private. And so now, as you progress, how have those, aspects of the company and the property helped you in terms of where you're at right now? Because now you've got a feasibility study, you've got reserves, you're looking at permitting, you're looking at financing. How's the story developed?
Well, it developed, with a plan from our management team to really look at organically growing the deposit through exploration, good old-fashioned exploration. And when we started to do that in earnest, we were finding that our discovery costs were very, very low at 0.4 cents. So it wasn't a very difficult decision for our management team to continue to deploy shareholder money to develop the asset at 0.4 cents on the back of a $6 copper price. We managed to grow the asset to an 11 billion pound resource and measured and indicated, and another 1.7 billion pounds of inferred resource.
I thought one of the keys was, as you built out the resource from Park Salyer into the property that you acquired, Mainspring, that you changed the mining scenario. You took it from potentially a higher risk underground scenario to get to the high grade Park Salyer quicker to an open pit scenario where you can take it from Mainspring, which sort of changed the mine plan and also the risk profile, let's say, of the project.
That's exactly right. Our acquisition of the Mainspring property was critical for us because it allowed us to change the configuration entirely into a lower risk open pit operation that we now refer to collectively as Park Salyer, and allowed us to really focus in on trying to get to the higher grade segments of Park Salyer quicker. So what you would have seen in our PFS versus the PA is we were able to move those cash flows forward because we were accessing the higher grade earlier, and that was a function of the pit design that we developed around Park Salyer. Now, the secondary phase of the development is the Cactus West project, but that doesn't come into play until year 14.
Yeah.
The real driver of value was really Park Salyer and Mainspring.
And what I also found interesting, like several years ago, having Newton as a partner sort of more than anything lowered your financing risk because, Newton is a subsidiary of Rio Tinto. You were a junior company with a market cap of probably 50 or 60 million at the time. And then Newton came in and they have, I won't say infinite capital, but they have access to capital with this processing sort of technology. I wasn't convinced of the technology because the sulfides was always something that would happen late. But given the copper price, where you are in the project, now it's open pittable and you've built out enough pounds of SXEW amenable stuff, the sulfides is just not part of the equation at all. And so Newton leaving has basically had no impact on your share price.
Well, you would have seen in our last PFS, the Newton technology is not in the economics at all, so it's absent the economics. And what we discovered, over the last couple of years or so, is that we can actually develop the asset absent that technology, and it would create significant value, and more importantly, simplify the process and simplify the messaging. It was still worth it for us to go down a path with Newton because it had a new technology and it could bring to life the chalcopyrite or the primary material that sits underneath the enriched material. And so that still had value to us, although, as you point out, it's at the bottom of the pit and really
so
won't come into play.
Year 20 plus.
Correct.
Yeah. But I mean, in terms of exploration upside, there's still upside in that gap zone between Cactus and Park Salyer. Is that
Yeah,
something?
there's two elements of the exploration program that we still need to look into. One is the gap zone, which is, as you correctly point out, the property between Cactus West and Mainspring. So we still have work to do there. The other area that's of interest to us is what we call the Northeast Extension, which is just slightly northeast of the Cactus West deposit, We had some showings there that were of interest to us, and we want to chase those down certainly in the next couple of years or so. But having said that, with an 11 billion pound resource at the moment, we think that the biggest driver of value is to try to move into first cathode production,
as quickly,
de-risk the asset, and try to move up the spectrum. Because currently we're trading at a 0.5 times NAV, and we're convinced that our valuation will materially increase as we de-risk the project, as we get the permits in place, as we complete the DFS, and as we complete the financing package that we're working on at the moment.
So one of the big things about Arizona Sonora with the solvent extraction, electrowinning of the copper to producing cathode, which is huge because it doesn't have to go overseas to be smelted and then come back as a car or something like that. You're actually producing cathode for the domestic industry. But you're private in terms of being on private land. How does that impact permitting?
So because we are on private land, we are subject to state environmental regulations. And we've been working very closely with the state authorities. We have a good relationship. It's a very transparent relationship. And it's a very predictable time path to completing the permitting. I believe once it's administratively approved, there's a timeline where the state needs to respond. And they've been terrific partners. And that process has been straightforward and has worked well, as is demonstrated by the dust permit that we just received recently. The federal process is a much more complex process and doesn't have a finite time life. So you just don't know how long you're going to be in the process, which has frustrated many parties, but we're not subject to that. And we think that's one of the biggest benefits to our project.
And now that you're going through permitting, I guess the other part is how do you fund this project? Because the other thing is with the funding, because one of the things that's driving the copper prices we talked about during our presentations earlier was the high capital cost intensity of putting these pounds into production. And you fall low on that curve.
Yeah, our capital intensity is just shy of $11,000 per tonne.
Yeah, and the average is around 20 to 25.
And the average is 20 to 25,000. We benefit from the fact that this is a brownfield site. It was an old mine that we're resurrecting. It has a power grid. It has a rail line. It's 5 miles from Casa Grande. We don't have to build a camp. And so we get the benefit from the existing infrastructure, which drove our capital to a much lower value than our peers.
And there's less escalation risk.
Correct. Yeah. And so, while there's always risk in the capital cost, because it's a lower number, we believe it's manageable. And that's why we believe it's also financeable. The other reason we believe it's financeable is because this asset generates, on average, when it's in full production by year 4, $620 million per year from years 4 to 14. So that's more than enough to cover any loan commitments that we'd have in place with your classic project debt financiers. Yeah. And those project debt financiers, the project will appeal to them for a number of reasons. Number one, we're in a low risk area from a geopolitical standpoint. And number two, the economics are so robust in terms of the coverage ratios on the loan that they deem it to be a fairly safe loan. Yeah. If you think about it, it's a 22-year project, and you're funding a loan that may have a mine life of 8 to 10 years.
And a lot of people want exposure to hard assets, especially in favorable jurisdictions that are permittable and have teams that can actually build them and take it into production.
Right. We have a very experienced team. I think people are very aware of George Ogilvy and his background developing assets, and Bernie Lawyer, our Senior Vice President of Operations, is also well seasoned. But also, amongst all of the functional areas, we have a team of individuals that have been in the mining space for anywhere between 25 to 35 years, are comfortable with the space and are comfortable with our path forward.
All right, so for those that don't know Arizona Sonora, but now know more about it, what should they expect in 2026 from the company?
Yeah, so we always focus in on what we think the value drivers for the organization are going to be, and there are really 3 key ones for this company this year. Number one, we're planning to complete the permitting process later this year, and we're on track to do that. That, I think, will be a key de-risking aspect and should show up in the share price. We're going to complete the definitive feasibility study So those will be very hard numbers with, more concise engineering and
the
work
final
around the
capital
planning.
number.
And by the end of the year, we're hoping to have a fully funded solution. And so far, we're making very, very good progress with the banks. We've spoken to 15 counterparties, and 14 of the 15 actually have expressed a strong interest in participating with the company in the project financing.
So you'll probably use traditional debt and equity, is that?
We're going to look at everything from traditional project financing, lease financing. We will look at other forms of financing, but we're going to target the lowest cost of capital
yeah.
financing first, and
Take
then
advantage of where you
and
are.
take advantage of where we are. Once we've completed the debt financing, we will have to do some equity financing, but we'll turn our attention to that once we've completed the debt financing, because if you think about it, when the debt financing is done, we will have also signaled a significant de-risking event,
Yes.
which is financing a single asset company.
All right. Well, thank you very much, Nick.
Joe, thank you for your time.
Appreciate it. And Nick's presentation will be up on the Metals Investment Forum website later, and as well you're probably watching it right now in terms of the interview. So thank you very much for watching Arizona Sonora Copper. If you want cathode exposure in a great jurisdiction in Arizona on private land that is well funded to go into permitting, and with a definitive feasibility study coming up as well. So Arizona Sonora Copper, Joe Mazumdar, Exploration Insights. Thank you for listening.